down 1 2/3% on the broader JSE All Share. A minute ago, you said that tentative, but this is a buying opportunity if you stock pick. Would that be phrasing you correctly, Deryck?
That's correct. I mean, look, I've always maintained for the last 6 months that weakness has got to be observed as a buying opportunity. And not so long ago, we saw the likes of Anglo all the way up at 350 Rand. And people were participating, buying the stock at 325 Rand. Now we're sitting with an opportunity where it's more than 20% off its highs. I personally think you've got to get involved and start picking up and bottom picking some of these stocks. I always say keep a little bit of cash in your pocket to take advantage of potentially some lower levels. But as a long-term investor, I'm adding to some long-term portfolios.
Are you fully invested in equities as Cannon Asset Managers, or are you holding cash on the sidelines waiting for opportunities that present themselves?
No, we're fully invested in cash. We are allowed to hold, I think, 20% cash. I think that's a maximum, but we stay fully invested in equities at all times.
Looking at opportunities from your perspective, credit retailers, are there any that stand out? The likes of Lewis, are you still positive on Lewis?
Lewis, JD Group, those are two companies that we still like. If you look at their valuations or their value metrics rather, they're still very healthy dividend payers. I think Lewis has a dividend yield of about 5. JD Group slightly lower, but on a price to book, they look very cheap, around about 1.4. And they've got a very strong balance sheet, both of them.
Do we have a consensus view on JD Group and Lewis, or is that a no-go area for you, Deryck?
I like these stocks. I think the most attractive thing, about them is their yield. So I will buy these stocks as sort of a yield play in a long-term portfolio. I won't expect any great swings in it or great volatility in these stocks, huge capital gains, but I will buy it to hold onto it for a defensive nature and look at those yields. I would say there is consensus on it, but I think, looking forward 12 months out, I don't see any great capital growth out of them, but like I said, I'm there for the yield.
We can't not talk about the financials today, with the likes of First Rand 3.5% lower, Investec Limited almost 3% down, Standard Bank reversing yesterday's gains, closing over 2% lower. Why the negative momentum on our local banks with that positive news flow out of the Eurozone, and then the fact that the liquidity requirements look to be in better nick than initially expected?
The way I view the markets at any given point in time is, they're very sentiment driven. So it doesn't matter sort of what valuations are sort of unfolding, what technicals are playing out at a certain point in time, but when people are panic selling, stocks tend to sell off in line with that panic selling. And when there is euphoria on the buying side, stocks tend to track upwards and move in line with the rest of the market. One thing what we must remember is while we were in the rally over 2 weeks ago for 7 days, or I think it was about 7, 8, 9 days of rally, we saw resources outperform and we saw banks sort of underperform the rest of the market. We're now sitting in a situation where we've seen resources pull all the way back, and banks have only come down just a little bit. So you did see a little bit of retracement. Yesterday, Standard Bank was actually positive on the day. And personally, I actually quite like the banks down here. I don't expect big swings in them. Volatility is picking up a little bit in the market, and I like them down here. I think that there is a little bit of upside in these banks at the moment.
So are you buying across the board where banks are concerned?
My top pick within the banking arena would probably be Standard Bank, and that's really where I would primarily be focused at this stage. But, when a market gets sold off like what we saw yesterday, to see something like Standard Bank hold its ground is very encouraging. So although we are seeing a little bit further downside in it at the moment, I quite like Standard Bank at these levels. And if you don't have, banking exposure in your portfolio, I think it's a nice time to chip away and just sort of add to the banking exposure.
If I'm right, Cannon likes Investec.
Yes, we do. We also like the banks. We overweight the banks and financials in general. Investec is one of the banks that you hold that you do like. I think if you look across all the banks on a price to book ratio, they're generally on historical grounds, they trade at about 2. Right now they're quite a bit below that. So although we do like Investec, we do hold Nedbank as well. I think First Rand, Standard Bank's also looking attractive.
You spoke of the top 4, Investec PLC, Investec Limited. Do either appeal to you?
I watch it quite closely, but in my mind, this is, within the banking sector, this is more of a high beta stock within the banking stock. So it's got a little bit more of a risk association with it as opposed to your top 4 banks. So if you are bullish on banks and you are sort of expecting banks to outperform and give you some upside, sort of a 10 to 15% upside from current levels, Investec should give you a nice move towards that sort of 60 Rand level on the PLCs and possibly higher on the limited. So look, it's more of a sector choice for me. And yes, I do like the banks. If you sort of got a little bit more risk appetite, then I would advise looking at something like Investec and looking for outperformance within the banks from something like Investec if you're bullish on the banks.
With that fear factor persisting in the market, and an opinion expressed by Daniel Smith, a metals analyst at Standard Chartered earlier, saying that you've got to be positive gold and it will outperform in the second half. They're looking at it pushing through that $1,300 an ounce level. Harmony today up 2.5% at the top of the top 40. Can you view gold as a currency, and are you going to, where do you stand if you don't have gold in your portfolio?
Well, as you know, I'm sure Adrian's mentioned this to you before, we don't hold any gold stocks. Gold has looked expensive for a very long time.
Do you have any exposure to the yellow metal itself via new gold ETFs?
No, we don't. We've got no exposure to gold at the moment. We look at the individual company fundamentals, and right now all of them look expensive. Within the resource sector, we've got exposure to your general miners, your diversified miners, Anglo, Sasol.
Deryck, let's move to gold and whether you have new gold ETF exposure. Let's leave the gold stocks out of the discussion. We know that there are a host of problems associated with deep level mining in the country, but new gold ETF.
It's attractive. I like new gold ETF, and often you do get the gold bulls coming into the market and phoning in, and clients who are really gold driven. And the best advice that I could give a client and say to him, would you like gold exposure, or you sort of sold on the fact that he wants gold exposure, I'd advise him to go for something like new gold. You also got a Rand play in that over 18 months, hopefully we should start to see Rand against the dollar from about 750 towards that 859 level. So, that would be my best advice if a client wanted to go into the gold arena. But, just looking in the short term, again, I'm not completely averse to gold stocks. I always use them as a trading sort of mechanism. And talking a little while back, we spoke about Harmony down at 72. We see it now at 82. It's a patient trade, but it's given you some nice returns over the last sort of 2 months. So, just from a technical point of view, I think that these gold stocks do look like they could actually push a little bit higher. But I agree with the fundamental valuations on them. I don't think fundamentally they offer good value to a long-term portfolio. It's more of a trading area of the market that I try to make a quick buck.
Andrew, we know that Cannon Asset Manager is a value investor, and you take positions and you hold them for a long period of time. But discussion around the boardroom table at the moment must be interesting. Do you think that we're going to see, with all the noise in the current environment, a further pullback, a further buying opportunity? I know we started off the discussion at the top of the show saying, is the market going to go lower? But although you don't look for the short-term noise to make your decisions, are we going to see the market going lower?
I think this week, towards the end of this week, when we see the US data come out on Friday, I think that will determine what happens in the market. Right now, we see value in the market. If it goes lower, we'll see more value. We're a long-term investor, as you mentioned, so we're not going to trade on this short-term noise. We'll buy and hold on a 3-year view.
And Deryck, a final comment from you.
Look, it's a scary market at the moment, and it's really kicking out a lot of skittish traders and investors. So personally, we've experienced sort of like a significant sell-off for the last 7 days. I think it's a little overdone at this stage. I would like to see our market base out. I'm very interested to see what happens on US markets tonight, whether they can close positive. And obviously a lot of attention placed on those non-farm payrolls on Friday. Volumes are very thin, like we mentioned, and that could be investors sitting on the sideline waiting for those non-farm payrolls on Friday. I've got a more sort of a bullish stance and hope to see our market kick off to the upside as we move into next week.